Section 16. Multiple liens, HOA claims, judgments, and title problems. The first lender says yes, but the property still can't close. David walks into Ashley's office smiling for the first time in weeks. His first lender appears willing to move forward with the short sale. Marcus and Elena are still interested in buying the property, and the parties are discussing the lender's requested changes. David believes the hardest part is finally behind him. Then, Ashley explains that the second line holder still has not agreed to the amount available from the transaction proceeds. David looks completely confused. He asks the obvious question: is my main lender approved the short sale? Why does the second lender get to stop it? This is where short sales become title problems as much as lender problems. A creditor's willingness to accept a reduced payoff does not automatically eliminate other interests affecting the property. Before the transaction can close, title and escrow need to determine whether the seller can deliver the title required under the purchase contract and what recorded interests must be addressed. One property can have many financial claims attached to it. David originally thought there were only two important numbers: the property's sale price and his first mortgage balance. The title work tells a more complicated story. There is the first deed of trust, the second lien, and an amount owed to the homeowners association. Michael also asks the title company to confirm whether any judgments, tax liens, or other recorded interests appear. This is something agents encounter regularly. A seller may have forgotten about a home equity loan obtained years earlier. A judgment may have attached to real property under applicable Arizona law. An HOA or condominium association may assert statutory lien rights for qualifying unpaid assessments. Property taxes can create another lien issue. Depending on the seller's circumstances, additional claims may appear in the public record. The agent does not need to become a title examiner. The agent does need to understand why title work should be reviewed early and why unexpected liens can affect the seller's ability to close. The second lien holder wants more money. The first lender is willing to permit a limited payment toward David's second lien. The second lien holder reviews the proposal and refuses. It wants substantially more before agreeing to the requested resolution necessary for the contemplated closing. David becomes angry. Tell them the first lender won't allow it. They have to take what's offered. Ashley cannot make that promise. A junior lien holder does not automatically have to accept whatever amount the senior lender permits in a voluntary short sale transaction. The parties may continue negotiating, but until the necessary lien issues are resolved, the transaction may remain unable to close as planned. This creates one of the most frustrating short sale situations. The buyer is ready, the seller wants to sell, the first lender is cooperating, and a smaller lien becomes the obstacle that threatens the entire transaction. Then the HOA account arrives. The title officer contacts Ashley again. David is also behind on his homeowners association assessments. David responds, "That's only a few $1,000s. Just pay it at closing." Maybe, but from what funds and subject to what approvals? Arizona law provides lien rights to qualifying planned community and condominium associations under ARS sections 33D1807 and 331256. The exact amount, status, priority, and treatment of an association claim can depend on the circumstances. A short sale lender may also have restrictions on what it will permit to be paid from the transaction proceeds. Ashley should not announce that the HOA lien has priority over another lien, or tell David that it will automatically disappear at closing. Those can become legal and title questions. She should coordinate with the title and escrow professionals, keep Michael involved, and recommend legal counsel when a genuine dispute concerning lien rights develops. This is why title should not be a last-minute activity. Imagine discovering all of this 3 days before close of escrow. Marcus and Elena have movers scheduled. Their loan documents are ready. David has packed the house. Then somebody discovers a judgment that nobody knew existed. That is how transactions fall apart at the finish line. Experienced agents want title issues identified as early as reasonably possible. Early title work gives the parties time to investigate unexpected liens, obtain payoff information, correct errors, negotiate with creditors, and determine whether professional legal assistance is necessary. A short sale already has enough uncertainty. Don't voluntarily add a last-minute title surprise. Know what you don't know. David asks Michael which lien has legal priority over another, and whether one of the liens would disappear if the property eventually went through a trustee's sale. Michael immediately recognizes that the answer can depend on the type of lien, recording history, foreclosure method, statutes, and other facts. He doesn't guess. That is good brokerage. Real estate agents should understand that lien priority matters without pretending they can provide a title opinion. Title companies and attorneys exist for a reason. When the legal effect of a recorded interest becomes important to a client's decision, get the appropriate professional involved. Finally, the pieces begin to come together. After additional communication and negotiation, the parties find a structure acceptable to the necessary creditors. The second lien holder provides the required written cooperation. The HOA amount is addressed through the approved closing structure, and title believes the identified issues can be handled if everyone performs according to the agreed terms. David is relieved. Marcus and Elena are excited again. Ashley finally receives the written approval from the first lender and forwards it to Michael with the subject line, "We got it." Michael calls her 5 minutes later. "Did you read every page?" Ashley pauses. "I read the first page. It says approved." Michael responds, "Then you're not finished." Because in a short sale, the word approved may be the least important word in the approval letter if nobody reads the conditions that follow it. That's where we're going in section 14. Short sale approval letters. Read before you celebrate. Online discussion 1. David's first lender approves the short sale, but the second lien holder refuses the proposed payoff. Why can the transaction still have a problem? Answer. Approval from the first lender does not automatically resolve another lien affecting the property. If the second lien holder's cooperation or release is necessary for the contemplated closing, that issue must also be resolved. The agent should coordinate with the appropriate parties and avoid assuming that one lender's approval clears every title problem. 2. Title discovers that David owes unpaid HOA assessments. Why shouldn't Ashley simply promise David that the short sale lender will pay them? Answer. The association may have lien rights, but the treatment of the amount at closing can depend on the claim, applicable law, title requirements, available proceeds, and creditor approval conditions. Ashley should coordinate with title and escrow and should not guarantee how the claim will be paid before the necessary information and approvals are obtained. 3. Why is early title review particularly important in a short sale? Answer. Early review gives the parties time to identify unexpected liens, judgments, association claims, tax issues, or other recorded interests that could prevent closing. Because short sales already involve creditor approvals and extended timelines, discovering a significant title problem immediately before closing can jeopardize the entire transaction.